Hello and welcome. You're watching the Business Today show with me, Sakshi Patra. First up, the top news we're tracking for you tonight. TCS pulls the plug on work from home, asks all employees to return to office. COO NG Subramaniam also tells Business Today television clients are getting more cautious about their investments given the geopolitical uncertainties. More bad news for the IT sector. Bellwether's Infosys and HCL Technologies lower revenue guidance for this fiscal. Both end the quarter with lower headcounts, but say new deal bookings are at a new high. Infosys ADR down more than 6% on Nasdaq. Good news for the economy as the country enters the festive season. Retail inflation dips 5%, the lowest in 3 months, while industrial growth zooms to a 14-month high in August. After gains of 2 days, markets end in the green but largely flat. IT index drags after muted TCS numbers. Energy and metals lead gains in other indices. Investors stay cautious amid the war in West Asia. Chinese smartphone maker Vivo accused of siphoning off $13 billion from India. ED also charges the company with violating visa laws. Infosys, India's fears of cryptocurrency being used for terror funding comes true. Investigative agencies discover that Hamas bypassed the global banking system and funded its terror campaign via cryptocurrencies. Straight on to the top story tonight. It's Tata bye-bye for work from home at India's largest IT firm, TCS. The company has asked all employees to return to office. In an exclusive conversation with Business Today television's managing editor Siddharth Zarabi earlier today, NG Subramaniam, TCS COO and ED also spoke about the big AI push and how increasing caution among clients are impacting the company's growth and margins.
The headlines clearly talking about how there's been a bit of a stumble amid economic concerns as clients cut back on spending. Would you agree with those headlines?
Thank you for having me. It's always a pleasure to connect with you and your viewers. It's been a muted quarter from a revenue perspective. I think the macroeconomic situation and the geopolitical changes that are happening by the day meant that clients are a bit cautious about what they want to invest in, what they want to spend in. That created a muted revenue growth for the quarter. But however, we are pleased that we have improved the margins sequentially by 110 basis points. And also a very strong order book in terms of the large programs, large deals at 11.3 billion came out much ahead of our own expectations. So overall, it's a good execution, disciplined execution from TCS in some trying circumstances. That's the way I would put it, Siddharth.
How long do you think these trying circumstances are likely to prevail?
It's very hard because even the economists are saying, I think, listening to your channel where one of the economists actually pointed out that the economy itself overall seemed to be resilient to recessionary and inflationary challenges. But however, the growth has been muted. And while growth projections have come for many markets, they're all below the historical average that they're all used to. So in that sense that there are going to be a certain amount of uncertainty. So our customers, what they are looking at right now is, if I'm going to go with a proposition or any project which is going to give a return on investment, which is very visible in, let's say, a quarter or two, then they want to execute those programs, right? While they continue on the long-term commitments that they made and they have not passed the long-term projects that we are executing, But then if I'm going to go with a proposal which is going to have a, let's say, a return on investment is going to be over 4 quarters or 5 quarters, then, clearly, they are not on priority right now, right? Understandably, because, of the macro uncertainties and everything happens. And from our own TCS perspective, we calibrate our plans, our hiring plans, our what we will do internally and externally. We calibrate it on a 15-day basis.
There's some reports on delays, and that was not just for your company, but broadly across the sector, and also questions on variable payouts. What would you say to that? Have full payouts been made, and all the offers that have been made, have they been fulfilled?
Firstly, I think, we communicate to all the people whom we hire certain date range, this quarter, this month, join us. I think, barring 1 or 2 instances where we had to push it by a week or 2, largely that was according to plan. Every single offer that we have made to the freshers as well as the laterals during the year have been honored, and we'll continue to honor them. So our onboarding program is fairly intact. That's the first point. With respect to the variable pay for this quarter, 100% variable pay will be granted to about 70% of our workforce. The remaining 30% will be based on calibration of their individual performance, and so on, which is typically the case for us in every quarter.
Absolutely. And one of the other points that I want to pick up on this matter, the last one on the human resources aspect, is the shift from hybrid to back to work. What can you say to all those people? Because this is something that has been closely watched in the workforce all across India.
We have been working with our employees and advising them to come back to offices. There are multiple reasons for it. I'll just step back and tell you, Siddharth, that when the pandemic struck, we enabled working remotely for all our employees within a matter of about 10 days, right? So our processes and systems, whether it is security or whether it is continuously, we innovated as far as enabling people to be contributing and to the growth of TCS, contributing to the projects in which we are working for our clients. All that remained intact. Having said that, what happened was that in the last about 6 quarters, a number of people left TCS. The industry had a huge, you all termed it as a great attrition. And a number of people who joined TCS were also huge, right? Close to about, let's say, roughly 150 to 200,000 employees have joined TCS afresh from the market, either it is from the universities or otherwise. So in that context, what we felt is that it's important that they all come back to work, come back to the offices, work with the senior colleagues, understand the TCS culture, understand the TCS way of working, how client interactions take place, how some of the labs that we have within the campuses are typically used to prototype and craft solutions quickly and then position it and demonstrate it to the customers as the overall value proposition. All these things matter. And we felt that, look, given the workforce that the fresher workforce that we have in fairly large numbers, we felt that that is the right thing to do. So we have asked every one of our employees to come back to office 5 days a week.
Well, there was more bad news from the IT sector, with bellwether Infosys reducing its FY24 revenue guidance. Infosys today reported a 4.4% rise in Q-on-Q in its net profit for July to September at $62 billion. The revenue also rose 2.8% on a quarter-to-quarter basis at $389.9 billion. Infosys also trimmed its FY24 revenue growth guidance to 1 to 2.5% from 1 to 3.5% earlier. Remember, the IT major also announced an interim dividend dividend of 18 rupees a share and did say that it has won large deals worth $7.7 billion in the quarter. Infosys headcount was also down 7,530 in July to September quarter.
We are seeing the discretionary programs, the last transformation programs, they have reduced significantly. And we are seeing the decision making continues to be slow. So as we've looked at this quarter, the volumes are still under constraint. And keeping that in mind, we've given a guidance for the full year. The large and mega deal wins really are positioning us very well for the future. But as we see the ramp-ups, which will be towards the back end of the year as we had shared, and even some of those, the ramp-ups and the starts will get pushed out. So that's where we are on the guidance.
On to stock market news then. Indices closed on a flat note today, with investors remaining cautious amid the ongoing conflict in the Israel and the Hamas war. The retail inflation figures released later in the day. The IT stocks remained under pressure post-TCS earnings as well as ahead of the Infosys and HCL results that we did see post-market hours. The Sensex fell 65 points to settle the day at 66,408, while the Nifty closed 17 points in the red at 19,794. The top Nifty gainers today were BBCL, Maruti Suzuki, Coal India, Power Grid and Grasim, while on the other hand, the top Nifty laggards today were some of the IT names like Infosys, Tech Mahindra. We also saw TCS and HCL Tech, and along with it was Apollo Hospitals. The Hamas blitzkrieg in Israel last weekend not only stunned intelligence experts worldwide, but also those tracking global financial linkages. The big question everyone is asking, how did Hamas arrange funds for this massive attack? The answer is simple yet disturbing: cryptocurrency.
2 years ago, a Delhi businessman found that he lost around 4 crore rupees from his crypto wallet. He reported the theft to Delhi police. Investigations did not lead far. What cops did find out from their Israeli counterparts was that the cryptocurrencies had made their way to online wallets operated by the cyber terrorism wing of the Hamas. The case of the Delhi businessman was not an isolated one. Bitcoin and Ethereum assets from India had regularly been transferred to Hamas. For the past couple of years, Hamas was not only trained with hand gliders, guns and explosives for the 7th October D-Day, but has been working overtime to ensure that it had funds for this mega assault. A review of Israeli government seizure orders and blockchain analytics reports shows that 3 militant groups, Hamas, Palestinian, Islamic Jihad and their Lebanese ally Hezbollah, received large amounts of funds through crypto in the year leading up to the attacks. Reports say that digital currency wallets linked to the PIG received as much as $93 million in crypto between August 2021 and June this year. Those connected to Hamas received about $41 million more over a similar time period. All 3 terror groups have been designated foreign terrorist organizations by the US government and are subjected to global financial sanctions. This means that anyone found transacting with those entities risk criminal prosecution and are being targeted with sanctions themselves. But the use of cryptocurrency clearly allowed Hamas and the others to bypass stringent global laws and enable them to amass weaponry and other equipment to launch the most significant attacks since the 1973 Yom Kippur War. India, which has been at the forefront of demanding regulations on crypto, in fact, had the terror aspect as one of the top reasons.
Essentially, by taxing, we were trying to make sure that we are keeping a trail and also making sure these are going to be eventually compliant with anti-money laundering rules and making sure that these kind of operations don't end up inadvertently to funding any kind of terror activities. So we wanted to be sure when there was no regulation happening, these activities which were becoming now fairly extensive are kept an eye on, and there should be a financial implication on them and therefore the tax.
Hamas affiliates like its military wing, Al-Qassam Brigades, have publicly solicited donations in Bitcoin since 2019. Funds have poured in form of cryptocurrencies like Dogecoin, the cryptocurrency often promoted by Elon Musk, stable coins like Tether and USDC that are pegged to the US dollar. Wallets monitored showed the terror groups investing in DeFi protocols and collecting profits using Solana, a cryptocurrency most famously backed by FTX's Sam Bankman-Fried. Most of these do not bother with the KYC rules. Crypto also allows users to bypass banks by instantly transferring tokens between digital wallets, which are normally held at a cryptocurrency exchange. Investigations show that some of the Hamas units also engaged in crypto minings. Israeli authorities have meanwhile frozen several crypto accounts used by Hamas. After an operation in June to seize crypto belonging to Hezbollah, Israeli Defense Minister Yoav Gallant said that the use of digital currencies was making the job of stopping terrorists' financing ever more complex. Bureau Report, Business Today Television.
And before we slip into a short break, Birkenstock, the iconic German sandal maker, was listed at the New York Stock Exchange last night at $41, a price which was 11% lower than the listing price of $46. The 249-year-old company raised around $1.5 billion, putting the company's valuation at just over $8.5 billion. The company remained in the hands of the founding family till 2013, when it was sold to a PE group linked to luxury conglomerate LVMH and its billionaire boss Bernard Arnault. The Enforcement Directorate has accused mobile phone maker Vivo of siphoning off as much as $13 billion from India. A charge sheet filed by the ED says that many employees of the Chinese smartphone maker and its Indian affiliates concealed their employment when seeking visas, and some breached the rules by visiting the sensitive region of Jammu and Kashmir. The accusations follow the arrest this week of a Vivo executive Guang Wenquang in a money laundering investigation launched in 2022 into India's second biggest smartphone player. At least 30 Chinese individuals entered India on business visas and worked as Vivo employees. But their application forms, according to the ED, never disclosed that the firm was their employer. Last year, the agency raided 48 sites linked to Vivo and its associates in the money laundering investigation, accusing the company of illegally siphoning the money off to China to evade taxes through companies it indirectly controls. This court filing says 1.07 trillion rupees or $12.87 billion were remitted outside of India by Vivo to some trading companies controlled by its Chinese parent. And the rapid rise in interest rates in the past 17 months seem to be having their desired impact. Retail inflation has now slipped to 5.02% in September after a recent high of 7.44%. The fall was led by food price inflation, which clocked in 6.56% in September versus 9.94% last month. However, the cereals and products price index was up 1.2%. Vegetables price rise declined massively to 3.39% from 26.1% a month ago. Core inflation, which excludes the food and fuel prices, fell to 4.5% versus 4.8% in August. Meanwhile, the industrial growth accelerated to 10.3% in August versus a contraction of 0.7% last year. And Business Today's television's managing editor, Siddharth Zarabi, analyzed these latest numbers with a panel of top economists, and here's an excerpt.
I just want to read out for our viewers the statement on that specific point by Governor Shaktikanta Das. He had said, and I quote, "A significant easing of inflation pressures from its exceptionally high level in July and August is expected to materialize in September as the impact of fleeting food price shocks wane." Another element, viewers, that seems to have been at play and was, of course, factored in by most economists, and that is the reduction in price of household gas by 200 rupees per cylinder, and the estimate is that it may have helped lower retail inflation by nearly 20 basis points in September. Siddharth, as we try and look ahead this month, the next month, festive season, and then heading into the new year, what's your own sense about how inflation is likely to be?
Well, we think numbers move somewhat sideways. Numbers can move a little lower also, but not significantly lower than this particular point.
When you say little lower, are you hinting at a sub 5?
Sub 5 is possible. Sub 5 is very much possible, but not significantly sub 5. But I think more than whether it's significantly lower than 5 or just about 5, I think one particular point today we must acknowledge that if I go back by about a couple of months, there was the RBI Monetary Policy Committee, which was dealing with a situation where inflation was around with a 7% plus kind of a reading. The next print was also looking around 7% zone. Nevertheless, it's important here, standing today with the benefit of the data in hand. We must compliment the RBI and the Monetary Policy Committee at this juncture that they didn't trigger any knee-jerk reaction, which could have been a very easy option for them had they been blindly thinking about inflation. So RBI, which had actually been very measured, nuanced, but at the same time very decisive and front-loading in their action in 2022 and the early part of 2023 in terms of their action, I think they did a commendable job couple of months back in terms of sticking to a thoughtful inaction also. I think that is also very important. That avoids a lot of knee-jerk reaction on the part of monetary policy, and hopefully we continue to see that going ahead in the coming months for India as well as for other countries.
Had these numbers been released within market open time, I think we would have seen a very, very sharp uptick, because some of the worries that the markets may have on the macro front will completely go away with these kinds of numbers, Rajni.
Like Siddharth had earlier highlighted, some part of the market was expecting that the inflation would be lower this month because of the projection given by RBI, because of which people had done that back calculation as to what the number would be for September. But yes, it has turned out better than what was market expectation. So there could be some reaction on that. But broadly, I would say the market would also, what the market, India's bond market is concerned about is the cautiousness which was shown by the central bank in the last meeting. And the fact that they said that there is a probability of OMO, the point that they want to keep the liquidity in the system tight, which has caused the yields to go up. So those concerns will remain in the market. And RBI was very clear that while they have not hiked the rate, while they have not changed the rates, they have used, in some ways, liquidity to keep the rates high. So that's something which, market would be concerned about. But yes, the IIP data is better than expected, so there would be reaction on that.
And with that, it's a wrap on this special edition. Many thanks for watching, but do stay tuned on to India Today to catch all the updates from the world of general news.